Hey folks, Patrick Francie here, host and CEO of the Real Estate Investment Network, host of the Rain Channel. Today I am joined by Mark Ferris, a trusted partner in the Real Estate Investment Network space with Ferris Capital Partners. Mark, you've been on the show before. You always bring lots of great info. Welcome to the show.
Great to be here, Patrick. Looking forward to our talk today for sure.
Well, we joked it's a little warmer where you are, although it's not cold in the Lower Mainland. It's much warmer in Florida, which is exactly where you're at. So good for you. Proud of you for heading that direction. So, Mark, we got three things that I want to cover today. And I want to talk about why real estate, why now. That's going to link to, given all that's going on, why real estate, why now. Why the US versus Canada? Why are investors looking to, and why is Ferris Capital Partners placing capital in the US, specifically in Florida, specifically in Tampa? You've got a good deal out there, some stuff going on. And finally, we're not suggesting for a minute that investors just throw money up against the wall to see what sticks. And certainly Ferris Capital Partners doesn't do that. You have processes and systems to choose those investments. Now, having said all of that, let's answer the first question. When you look at what's going on in the world, why real estate? Why now?
Yeah, great question. And, I look back, 90% of millionaires made their wealth through real estate, and it's no different through any sort of down period. I look back when I got into real estate in 2007, that the best times to buy in retrospect, when I look at the dips, the best time to buy is when it wasn't sexy time to buy. When you look in the newspaper and it was really not great, like things were looking grim, your friends and family weren't saying good things about it. Those were always the best times. And when I look back on the peaks, when everybody was talking about it, it is the best time to buy, and the newspapers were all saying good things, those were always the peaks that I realized that they just didn't stay for a long time. And then you saw a drop off. So the other thing that I realized is that out of all the investors, there's no investor that I found that could time the bottom perfectly. And so any sort of like down cycle, which we've seen, buying through the down cycle is really the best investors. They look like geniuses coming out of it. And so right now, what we've seen down in Florida, we've seen 3.5 caps rise up to 5.25 caps right now. And so we're in that cycle now, and it doesn't feel right. It doesn't feel sexy to buy right now, but we're going hardcore. We're ramping up now, and we're going to be buying all through the cycle.
It's interesting that you bring that up. I'm old enough and been on this planet long enough to have gone through about 5 different recessions. And I don't need to go all the way back to, the 80s, but let's talk even about the great financial crisis, this GFC. I mean, think about what people went through, and the decisions that a lot of investors make was to have the courage to actually put their capital to work. And to your point, today they look like geniuses, having gone through that downtime and having the courage and the education. Now, it's not, like I say, we're not blindly throwing money up against the wall. We're literally saying, get the education, get the support, and align with somebody who's been around a long time doing real estate, which is what you've been doing for that long. But Mark, you've seen it too, I think, is that it's really mentally a tough game, because back in 2021, 2022, everybody's a genius. The wealth effect is high. I mean, everybody's feeling like they're loaded. Both, well, literally and figuratively. There was not necessarily so many people had cash in the bank as much as their stocks and equities were going through the roof. They had Bitcoin, maybe they had some precious metals, but the point is they're feeling pretty darn wealthy. And now that's all gone away, and they're feeling broke. Although they have not sustained an actual capital loss, they feel like they have. And now they're just like, whoa, I'm just going to keep my wallet in my pocket. What's your thoughts around that?
Yeah, it's scary out now, especially you start seeing the news. And, one of the things for real estate investors that are listening out there is that you've come, especially say in Ontario, for example, that prices have risen to a point where a lot of these properties aren't cash flowing anymore, whereas they used to cash flow. So if you did any sort of refinance and pulled some money out, we had been accumulating single family offices we were looking at and investing it in small multifamily. And we had been cash flowing all the way along. And we did some refinances along the way. And so we got to about a $40 million equity in portfolio and what ended up happening was these properties stopped cash flowing. And so I started needing to feed some of these deals. And I realized the importance of cash flow and the genius, what Robert Kiyosaki had to say. So, we thankfully we unloaded around 2021 a number of single family. We still have some of those, but I started to feel the little bit of a crunch when I'm needing to feed the deal. Yeah. And so it was interesting. As for allocating any further capital, when I was down in Florida, I started seeing these deals that were actually cash flowing. And it reminded me a lot of 2008, 2009, when we started accumulating these properties. And so now moving forward, I've doubled down on the idea of only buying for cash flow, especially during these uncertain times. And so not only do I like cash flow, I like upside potential. So if you can buy in an emerging market that's putting money in your pocket, as Kiyosaki says in Assets, something that's put money into your pocket, liability, something that takes money out of your pocket. And so investing based on solely on appreciation is not something that I'm personally doing. And we're not advising investors. I'm not saying you can't do well in that. I'm just saying that that's just more of a philosophy that I've seen and following out.
Now I get why, you've moved out of Canada and really focused on the US, and many very astute real estate investors are in different US parts of the US and different states, different cities, of course. But, you focused on Florida, you're talking about Tampa, you've got a 104 unit project out there that you're looking to capitalize. But let me go back to this question here. When I look at what's going on in the US, not that Canada's any better, you got Joe Biden as the frickin' president. You got, and then in Canada, we got Trudeau as our prime minister. And I know this is politics, but listen, let's face it. We're lacking severe qualities of leadership on both sides of that border. And then on top of it, we've got wars unfolding all over the place. Don't you feel a little bit nervous about what's going on, or do you actually think the confusion and the chaos is where the opportunity lies? What's your thoughts on that, given the global kind of economic, I don't know what this is going on, but what's your thoughts?
Yeah, great. It's so good. And you're right. Leadership is so critical wherever you're investing. Thankfully, when I look across the United States, the state, the governors in these states have a lot of power on how that state is run compared to the overall president. And so when I look at the states to invest in, whether you like the governor of Florida or not, with DeSantis there, he's a strong business leader. And some of the principles he operates off of, like Florida, I mentioned this in our last call, is $1 trillion GDP. Like it's the 18th largest GDP in the world. Wow. If it's a country. And so there's a lot of good things happening. And they don't have rent control there as well, which allows you to execute on a business plan, right? And so when it comes down to the areas to invest in and what's going on in the overall market, to me, I really go back to what people always need. And people always need shelter. And so especially with it becoming harder and harder to own a home today, more and more people are going to be renting. So if you position yourself where there's more and more people that are going to be needing housing and affordable housing. So that's why for us, we're not huge on new development. We like coming in with a value add play where people can actually pay a little bit less, but get a newly renovated unit. So it feels like new, but our cost basis is substantially less than any of the new construction side of it. So that's just our philosophy. And with the larger multifamily buying for cash flow, it's one of the most resilient, when you go back, it's one of the most resilient asset classes through any sort of downturn. And you come out on the backside looking really smart, which is just it's a more of a pick of an asset class, I think, in running with operational excellence.
As I look and listen to many talking heads on YouTube, which I guess literally we are talking heads, in the video series, but, I just know that our methodology, our processes, our systems, way we invest in real estate, our experience investing in real estate actually does work through highs and lows. I often say that there's no bad real estate markets. They're just shitty strategies, bad tactics, find any market and then just adjust the strategy and tactic in that particular market. Something that you shine a light on that I 100%, I just beat this drum all the time. I go, rental demand is not going to go away anytime soon. Let's face it, affordability, interest rates are going to take a lot of people out of the market for a number of reasons, not the least of which is they don't qualify for a mortgage, they don't have the down payment, and even if they do have the down payment at 8%, 6%, they can't afford that mortgage payment. So what are they forced to do? Rent. And what's interesting about that is there's some very quite significant household incomes that are in that position. They have to rent. So the demand is there. And if you're treating your real estate investing like a business, if you're looking at real estate investing like a business, my point of view is really clear. If I've got a business and I know I've got a lineup of customers, all I have to do is look after them. All I have to do is give them product. And there's a kind of right now a never ending demand for good product, for good management, for good rental accommodations. I'm in all day. War or no war, recession or no recession, people are going to need a place to live. And those with the challenges that they face in the mortgage world are really great tenants and great clients as a landlord or as a rental house property. So a little bit of a long answer or a long comment, but that's my view of it, and I know that, and I believe that to be true. Now, having said all of that, systems, processes, methodology. Ferris Capital Partners, you as the CEO, you guys have a system. Can you kind of give us some tips or insights into the process you go through?
Yeah, it is so important as you scale up. And I'm really thankful that I learned through scaling up a real estate team. I started, selling 150 homes personally. We scaled the team up where I transitioned more into the CEO role, where we built the leadership team, management team. We learned the scaling up methodology from Vern Harnish, EOS traction, setting up your level 10 meetings, your same page weekly meetings, your daily huddles, your reporting on your metrics, and setting key processes. So we learned a lot where we do $1 billion in sales, where I'm spending about 95% of my time on Ferris Capital. And the team is running and they're thriving and they're doing a really great job. So we learned a lot from that. We're applying those same lessons learned to the capital side and creating that best investing experience in the world. That's what we're striving for with this. And so with that, one of our key processes is when we're looking at at properties, like finding deals out there, Patrick, is like a needle in a haystack. We need a set process to filter through. Like this Tampa deal, we had to look through over 100 deals to get this one. And so there's 10 things we look at before picking it to say, we can actually offer on this. So the first thing is we won't buy anything older than 1980. Construction changed then. So it's got to be 1980 or newer. Number two is there's got to be a value add component to it where we can go and force appreciation and not hope that it's going to go up in value. We're going to go in and force it. Yeah. Number three is that we can pay our investor partners 5% distributions, and we can pay that out monthly consistently. If it doesn't fall within that, we won't look at it. So there's got to be cash flow. It's got to be able to return 15 to 20% annualized returns on an annualized basis. There's got to be low crime. Our asset manager, she's a 20-year vet. She's been through multiple scenarios where from a crime standpoint, it's just not worth it. Increasing population, so the market we choose. There's got to be no rent control. There's got to be increasing population. There needs to be, number 7 is diverse employment and in the local area. So it's not all, more than 25% of the industry is not on one industry. So if one industry goes down, you're not dependent on that based on people needing to move out of the area because, say, an employer went under. So it's got to be diverse employment. And then 8 is a big one. Is it's got to be, once we go in and renovate and we push rents and increase rents in that, it's got to still, the income for the apartment needs to be, for a tenant's income needs to be less than 35% of their income is going to be going towards rent so that they can still afford it through this period. Right. So it's got to be under 35% of one's income towards rent. Number 9 is low new inventory coming on, because we don't want to compete with a bunch of other, even if it's new, that's going to eventually push ours down. If they can't rent it out, they're going to be lowering their rents, which would then put some exposure on us. So low new units. And then last but not least, we love going in and rebranding. That's one of the things that we see, that there's a shortfall out there on rebranding properties. And because of our background in marketing, we got to be proud of the building we're buying. So down the road, as we rebrand it and we put our Ferris Residences branding on it, that we can be proud of that building. But when you're proud of something, you go the extra mile for it. So that's like a process that we follow to ensure that anything that comes out the bottom of that, we don't spend a lot of time going after properties that don't hit one of those items.
Beautiful. And so, we've got great opportunities in this market. You see great opportunities in the US. As a matter of fact, you've got great opportunities. Right now, you're in Florida. I know you're looking to expand into a couple other deals that you don't want to share just yet, but there is some other stuff coming outside of Florida, which we're excited to hear about. And folks, if you're interested in even having more conversation and learning more, we are doing the Real Estate Investment Network is co-eventing, if that's a term. Anyways, we're putting an event together with Ferris Capital Group in Mississauga on November 27th. I'm going to be doing a whole segment on raising capital plus a market update with JG Francoeur. Mark is going to be there to talk about exactly why and what he's doing in the US and the opportunities that are there for investors. Because I look at this as well, Mark, at the end of the day, investors are challenged sometimes to get financing and to get the mortgages that they need and to raise the capital that has to come up, but they still have capital to invest. And this is a perfect opportunity to have that hands-off passive investment that can get them great returns. And so I'm looking forward to hearing even more about it. November 27th, all the links and all the information is going to be in the description below. Mark, as always, thanks for your time.
Yeah, appreciate you, Patrick. This is great. Thank you.